Hour, but let's get going with all the stocks that are buzzing in trade today. And first up, let's put the spotlight on State Bank of India. This on the back of their fundraising plans, where sources are telling us that the company, or rather the bank, is looking to raise about 25,000 crores via QIP. Sources are also telling us that this is likely to happen in the next quarter. Citigroup, HSBC, Morgan Stanley, Kotak Mahindra Bank, ICICI Securities and SBI Capital Markets. These are likely to manage the QIP, and the 6 banks are likely to be mandated as book runners for this issue. So remember, the bank is looking to raise about 25,000 crores via QIP, likely to happen by the end of next quarter. This is source-based information that we are getting from our sources. SBI in focus on the back of this fundraise plan.
All right, SBI is in focus today on the back of that big fundraise that's coming in. But moving on to the next counter, and that is KEI Industries. Now, ICRA has upgraded long-term rating to A++ stable and reaffirmed the short-term CP rating at A1+ for KEI Industries. Now, remember, KEI Industries has run up like more than 5.5% in the last 5 days. So we do see a bit of profit booking coming in there. At this point, it is trading at the day's lows point, succumbing to the selling pressure, trading with cuts of 1.3%.
Okay, so KEI Industry is down 1.3% as we speak. But on that note, let's also introduce our technical guest for the second half of this show. Sneha Seth, derivative analyst at Angel One, is now joining us. Sneha, thanks so much for taking your time out and joining us here on ET Now. And JSW Steel, that's the first stock that you picked for us. Tell us, where do you see the stock headed from here on?
If you look at the chart structure for this counter, we have seen this counter showing strength recently with volumes. In fact, if you see the daily chart structure, we have seen this counter surpassing the resistance placed at the falling trendline zone. So I believe the counter looks poised for a very strong up move, at least towards 1,060, 1,070 zone is very much possible. And above that also, it looks very much likely. So I would suggest if someone wants to go ahead and take a long position into metal space, one can look forward for JSW Steel. Keeping a strict stop loss around, say, 1,000 should be the stop loss, and the target would be around 1,080.
See levels of 1,080, that's the word coming in on JSW Steel. But let's also put the spotlight on power stocks. The likes of Adani Power and Tata Power are continue to be in focus today on the back of news that came in from Maharashtra, where this is the first ever power tariff cut that has been announced in Maharashtra's history, where power tariffs are likely to be cut by 10% in year 1 and by a cumulative of 26% over the next 5 years. Remember, Maharashtra Electricity Regulatory Commission has put out a proposal, which is a rare move because in the past we have only seen power hikes to the tune of 10% that we have seen over the last 1 year or so. But now perhaps we could see power prices going down by as much as 10% in year 1, followed by a cumulative price decline of 26% over the next 5 years. So on the back of this news flow that has come in, all of these power stocks continue to be in focus today. Tata Power holding up in the green, and so is Adani Power.
All right, we will keep with the power sector then. The TND losses will have a positive impact on the private companies and negative impact on the merchant-based companies, believes Elara Capital's Rupesh D. Sankhe. He also talks about the boom in the capex in this sector. Let's go across and listen in to his word.
There is a stiff target to bring down TND losses. That is a clear-cut message. So definitely it's a positive for the private players like Tata Power, CAC, Torrent Power. If there is more and more distribution circles is coming in the privatization of franchising. Power prices is low, then it might be negative for the merchant-based companies like JSW Energy or Adani Power, because they get benefit of higher peak demand and higher exchange price. So loss in tariff is good for the consumers, may not be good for the distribution companies, but it's a neutral for generation companies because they have a fixed ROE kind of model, and neutral for the transmission utilities. And because of better management of your power sourcing, you will see the declining trend in the overall power tariff in the coming years. And that is good for the consumers, good for the generation transmission companies, but the distribution company has to bring that kind of efficiencies and has to meet the regulatory norms by 2032. Close to 9 lakh crore kind of investment is there on the entire transmission and distribution space.
That's the word coming in on what the impact could be of the price cut that has been announced by Maharashtra government when it comes to electricity prices. But shifting focus back to the cement sector then, we did talk about the fundamental reason as to why all of these cement stocks are buzzing in trade today. But Sneha, you've picked up on Muji Cement for us. The company also has its AGM later today, but you tell us fundamentally, we did talk about the reason, but technically what do the charts suggest for this one?
See, if you look at the chart structure, it's been a fourth session that this counter has been heading northwards. If you look at the chart structure, on the higher side, there was a resistance placed around the current levels, that is around 565 zone. And looking at the overall move in last couple of sessions, along with the volumes, I believe this counter may continue to extend the upward move. I believe any move above 580 would be very interesting for this counter. If you look at the chart structure, I believe from November series onwards, we haven't seen this counter surpassing the levels of 585. And looking at the move, what we have seen in last couple of sessions, along with the volumes, I believe if we manage to surpass the resistance zone placed around 585, we may head towards at least 640, 650 levels is very much possible. So here the risk reward ratio is quite good. But if someone wants to go ahead and long for a medium to short term perspective, they can go ahead with this contest.
Alright, that's a Muji Cement on the charts. But moving on then, coming to you, Rabinda, you picked out Nika for us. Tell us, we had the analyst day meet for Nika. Tell us, what are the key takeaways from the meet?
Well, as Nika is in focus, where company in the investor presentation said that the Indian retail market to surpass $1.5 trillion by 2030, and India ranks third in the retail after USA and China. They say that the consumption slowdown and inflation impact e-commerce today, but long-term trajectory is intact, and the Indian beauty and fashion to make up 39% of the total retail by FY30. And in the FY30 mission, AIM company say that the online beauty and fashion market to reach $70 to $5 billion, and Indian BPC market to reach $40 to $45. And company say that they have aimed to grow at the mid 20 level percent, and the company is aiming to grow customer acquisition and the expansion of retail footprint to more than 500 stores in 100 cities by FY30. So back of all this, Nika is in focus, and stock has recovered approx 1% from day's low to trading green.
Okay, so the stock is recovered from the lowest point of the day and trading in the green as we speak. But let's also put the spotlight on HGFC AMC. Where do you see the chart stock headed from here on, Sneha, and what will your view be?
See, overall, if you look at the chart structure, this counter has a very strong chart structure. If you look at the moving averages, it is trading above all the key moving averages. Any counter trading above 20 DEMA on the daily chart, it is said to be very positive. So I believe this counter is gradually moving higher. And again, we have been seeing this counter has been taking support in the 20 DEMA. For now, I believe one can, someone who wants to go ahead and long this space, one can keep a strict stop loss of around 4,950 and can go long. I expect this counter to head beyond the levels what we have seen. So we can expect a new record high anytime soon. So if someone wants to go ahead and long, can go ahead and long, keeping a strict stop loss of 4,950, and upside the level which we have to see is around 5,250 would be the first level. Once we see it moving beyond this, then possibly we can head towards 5,600, 700 zone. That is very much possible over here.
Okay, so that's the view coming in on HGFC AMC, but let's put the spotlight on FMCG major HUL. And to give you a brief background, it was in the month of March this year when the global company, that is the parent company of HUL, Unilever PLC, had announced that it will spin off global ice cream business into a separate listed entity, Magnum Ice Cream Company. Now, as a result of this announcement, which the company had done in March this year, domestic company, or rather the Indian listed company HUL, has now said that it will be demerging its ice cream business into a new company, Quality Walls India Limited. And once the demerger is effective, Unilever Group shareholders will collectively hold about 61.9% stake in the company. Now remember, Unilever Group will sell its entire 61.9% stake into Magnum Holding Company. So some corporate rejig that is happening on account of demerger of its ice cream business, The stock continues to be in focus today, absolutely flat as we speak though.
All right, moving on from one FMCG player to another one, Marico. That's gaining ground today with gains of 2.5%. Sneha, tell us what do you see in the charts for Marico? From the FMCG basket, Marico has done pretty well, a 14% gain coming in the last 6 months. From here on, do you see this to continue?
Yes, if you look at the chart structure, the chart structure is very strong. In fact, this week the counter is up nearly 4%. If you look at the chart structure, I believe this counter has a potential to make new record highs even once it surpasses 740, 45 zone. I believe we may see a strong move coming in at least towards 770, 780 zone is very much possible. So someone who's looking to enter for a short to medium term perspective, one can go ahead and bet on Marico as well. Other counters like HUL and everything also looks good. But yes, for a short-term perspective, looking at the volumes and chart structure, one can go ahead with Marico.
That's the view coming in on Marico. But before we slip into a short break, the Bond 2025 Climate Conference is underway, serving as a crucial mid-year checkpoint ahead of COP30. Geopolitical events casting a shadow over the talk, the Indian delegation expressed disappointment over the exclusion of climate finance and legal obligation of developed countries discussed from the Paris COP. The $100 billion pledged by developed countries to developing countries has remained a point of discussion for the past few COPs. On June 27th, key policymakers and leaders come together to discuss the climate finance responsibilities towards COP30 at the second edition of the Times Network India Climate Summit in New Delhi. But we need to slip into a very short break. We'll be back in a moment.
Welcome back. You're tuned into Market Fatafat, where we are taking you through all the buzzes in trade, either on the back of news flow or on the back of technicals. Well, the next counter in focus today is Tech Mahindra. Now, Citi is maintaining a sell rating on Tech Mahindra with a target price of 1,430 rupees. Now, they feel that the management remains highly focused on achieving a 15% EBIT margin target by a financial year of 2027, but revenues momentum has been impacted by the macroeconomic uncertainty and reduced discretionary spending. The valuations at 28x FY26 estimate and 23x for FY27 estimate consensus EPS suggest that much of the expected improvement is already priced in, and therefore they're maintaining a sell call. And on the back of that, Tech Mahindra is declining in trade with cuts of 1+%. But moving on to the next counter, Rabindra, you've picked up CEAT for us. Now tell us what's the news flow here.
Well, CEAT has announced a capital infusion of up to Rs 400 crore in its wholly owned subsidiary, Sri Lankan subsidiary CEAT OST Lanka. And apart from this, company to also raise up to Rs 500 crore to NCD via private placement, and this is in addition to the Rs 250 crore NCD already issued. And apart from this, company board has also approved the avail of a credit facility of up to Rs 1,000 crore for business purpose in one or more tranches. But stock is trading with a cut of more than 2%.
All right, CEAT is trading with cuts of more than 2%, but moving on to the next counter, DLF, that is again a counter that is declining in trade with cuts of almost 1.5%. Tell us, Sneha, what do you see on the charts for DLF? Now, the entire real estate pack is also something that people have been talking about, but DLF is a counter that has actually underperformed. So, do you see this to start performing now?
Yes, very much possible, because if you look at the chart structure, we have seen a very strong move coming in from 600 zone, and the counter, almost reached 900 zone even. We have seen some profit taking in last couple of sessions, but if you look at the chart structure, I believe that there is a strong support zone placed around 230, 240 zone, and I believe we may see an up move at least towards 880. Once we see a move above 880, this counter may again resume its rally what we have seen recently, and can head at least towards 950, 960 zone. So at this point in time, risk reward ratio looks quite good. Profit booking or the dip what we have seen recently can be utilized to go long way.
All right, so that's DLF on the charts. Coming to the next counter, PFC, again on the back of a brokerage note. Tell us, what does the brokerage note say, Ravinder?
Well, yes, Motilal Oswal has come out with a note on PFC and they have maintained the buy rating with target price of rupees 485. They say that the power sector investment landscape is being fundamentally reshaped by technological advancement, particularly the shift from traditional coal-based generation to renewables. And PFC has significantly reduced its stress asset portfolio. Motilal said that the asset quality of the company continue to be improved, driven by the stress asset reallocation, and they expect a CAGR of approx 12%, 8% in AUM and PAT over FY25 to 27, with ROA and ROE of 3% and 18% in FY27. So back of this, PFC is in focus and the stock is holding a gain of more than 1.5%.
Alright, PFC in focus today on the back of that news flow, but with that it's we are completely out of time. So Sneha and Rabindra, thank you so much for taking the time out and giving us all the buzzers in trade today. But let's move on to the next story. Probe into the catastrophic crash of Air India 171 continues. While both black boxes have been recovered and brought to Delhi, the analysis is still underway. Samir is joining in with the updates of that.
The investigation of the ill-fated Air India's flight AI-171 aircraft crash in Ahmedabad on 12th of June, it is going on in time-bound manner. AAIB, the Aircraft Accident Investigation Bureau, has been tasked to carry out the investigation. And on 13th of June, AAIB constituted a multidisciplinary team, and it is led by DG AAIB. So as per the investigation progress report shared by the government, on 13th and on 16th of June, the CVR, the cockpit voice recorder, as well as the flight data recorder, it has been recovered from the crash site, and now the black box, in a layman term it is termed as black box, it has been safely brought to AAIB lab here in Delhi on 24th of June, and the data extraction process, it has been commenced and it is being led by DG AAIB along with the technical members from AAIB as well as from NTSB. So the crash protection module, which is CPM, it has been successfully retrieved on 24th of June. In addition to this, the memory module, it has also been accessed and the data was successfully downloaded at the AAIB lab on 25th of June. So these important data, so far it has been extracted and now it is being analyzed at AAIB lab so that they can find out the real cause of this aircraft crash, and also this will help the government to lay down the guidelines or form certain norms that will help to prevent such accident in future time as well.
Alright, we'll keep getting you more updates on that. But with that, it's a wrap on this edition of Market Fatafat. I'll take your leave. But before that, let's take a look at how the market is shaping up. A strong recovery that's coming in on the market right now. As far as Nifty 50 is concerned, there is a recovery of almost 100 odd points since the time we started off the show. And Nifty is above 25,500 levels now. So we've crossed that 25,500 on the Nifty right now. Trading with gains of 1% there. Nifty Bank also very sharp recovery coming in of almost 600 points from the day's lowest point on Nifty Bank as well. That is up, sitting at 57,150.65 is where Nifty Bank is trading at with gains of 1%. So strong recovery coming in on the frontline indices. But with that, this wrap on this edition of Fatafat. I'll take a leave. Thank you so much for tuning in.